Welcome to the MarketEdge Tech Talk with Will Paule and special guest David Blake. We're going to review the market conditions of the past week as well as longer-term trends from a technical perspective, take a closer look at the major indices, and to wrap it up, dig into a handful of individual stocks and ETFs requested by subscribers. If you have questions or want to submit a stock for next week's webinar, email us at support@marketedge.com.
Hello and welcome to the Tech Talk for Tuesday, February 7th, 2022. I'm your host, Will Paule, and I'm here with my co-host, David Blake. How are you doing today, David?
I'm doing good, Will. Thanks.
All right, let's start off with a look at what the market's been doing this past week with a look at the market letter.
Okay. Well, we had another volatile week last week. The investors were waiting for the FOMC meeting to conclude on Wednesday, and a lot of investors and market participants were looking for signs that perhaps the Federal Reserve is close to topping out on their rate hikes, or maybe even announcing a pause, which I think was wishful thinking. But anyway, we started out with a big pop on Monday ahead of the meeting. We had, even though the Dow lagged a little bit, but we got in there. We saw some economic data that showed some cooler inflation data on Tuesday, and that revived hopes again that the Federal Reserve would be less aggressive on their rate hikes. And sure enough, on Wednesday we did get the quarter-point rate hike. That was kind of built into the market. I think there was a 98% chance of a probability of that going into it, and the market reacted positively to that. But more so, we had kind of a softer tone from Fed Chair Jerome Powell. He said the committee saw progress in slowing inflation. They were getting close to a pause in their tightening cycle. And we saw yields nudge lower on that. In fact, as has been the case, once we see the yield in the 10-year pop below 3.5, we usually get a pretty nice spike in the markets. And we did that. As they moved lower, the NASDAQ jumped 616 points over a two-day period there. And it was up 5.3%. That was basically led by the strength in technology and different growth assets. Things were looking great, and then all of a sudden we come up here on Friday and we got the January payrolls number, and they were expecting about 190,000 jobs to be created, and we had 517,000, which is a blockbuster number, no matter what's going on in the economy. And that kind of shook investors up. We saw the yields march higher on that, and stocks sell off. The 517,000 new jobs, we don't know if that's an anomaly or what was going on, but it was certainly unexpected. Whether it was from people, money running out and people have to find work or what, maybe we'll find out here in the next couple of weeks. Probably even this Thursday when we get the jobs number for the week. We'll see whether maybe we see a little bit of more initial jobless claims come in. But we'll have to see. But anyway, we had several earnings from some of the big cap tech companies. Meta Platforms, the old Facebook, had a blowout number that was up to, I think, $20-30 a share. Align Technologies was up big. Harley Davidson, and then more than some of the industrial stocks we had. Caterpillar was down. I think said Merck was down. Amgen. We also saw weakness in Amazon, Aflac. Some of the insurance companies haven't been acting very well, and so because of that, with the big cap tech stocks, outperforming a little bit, we did see the growth sectors lead the advance last week. Communication services, thanks to Meta's pop, what was the strongest sector, followed by technology, consumer discretionary, industrials, and even REITs outperformed, with the rates pulling back there. Then we had energy, utilities, and healthcare, which are a little bit more defensive sectors. They traded lower. We did see another dip in crude oil prices. Part of that was there were some questions, I guess, about China's reopening struggles, and also some of this back and forth stuff with the United States and China. There were some raised tensions, may have caused some of that too. But anyway, they thought that perhaps, with their reopening struggles, there may be a little bit less demand for oil. Although now we're seeing a turnaround in that this week. In fact, today oil's up about 3%. I was just digging in to see if there's any special cause. but I didn't see anything. Perhaps it's because of the earthquake over in Turkey and Syria. Maybe I know they had to shut down a key port in Turkey that may, have be shipping some of the oil. I don't know that for certain though. But anyway, the Friday's jobs report sent the yields back to where they started the week. We closed the 10-year Treasury yield at 3.54 and the 2-year around 4.32. That had actually fallen down to 4.08 during the week. So the jobs report really did affect the market. I mean, that was a surprise to everybody, and of course the market had to react to that. Technical condition of the market improved last week again. The NASDAQ was finished the week on a 5-week win streak. The Dow actually ended down 52 points, no big deal. The S&P 500 was up for a second week, so that was the second time in 3 weeks, I guess. So that was good. We actually also saw the S&P 500 break out of a bullish triple top point and figure chart breakout, which is a real bullish sign. I talked about before about some of the other indexes had done that, which was a bullish sign. We also had what we call a golden cross in the S&P 500 finally. It's where the 50-day moving average crosses above the 200-day moving average. That's basically it's looked at as a confirmation of the intermediate term trend that is now higher. Technical indicators for the different averages are still bullish. Momentum's strong. In fact, we're getting up there around towards the overbought territory. And in fact, we had stochastics last week. Even with Friday's sell-off, we're in the 90s. 14-day RSI, you don't see that above 70, 75 very often, but we were up there last Thursday, I think. And we also on Thursday, if you read the daily comment, I mentioned that the MarketEdge S&P short-range oscillator, the SRO, had hit 744. And anytime that gets over 7%, you're going to probably see a bit of a pullback. So just the fact that we were overbought and then we had that jobs number come in at the same time probably led to a little bit more selling than we might have seen after that job. Okay, we did see some positive divergence in outperformance on the secondary indexes. Again, we like to see the transports and the small caps and the semiconductors lead the market higher and lower. The transports last week were up 7.5%. A lot of that was on trucking, strength in trucking stocks. They were really strong. If you've been on the highway in the last month or two, there's trucks everywhere. I called a couple of my friends and told them I said, buy trucking stocks because they're everywhere. So we saw that. We also had I think some of their airlines were a bit higher, but mainly the trucking stocks. And also we had earnings from UPS, which were way higher, and they raised their guidance. That helped FedEx also trade higher in sympathy. So that was strong. We saw the semiconductors. They were up 4.6%. The only negative that I saw in the charts last week was the fact that we may have a double top formation in the small cap Russell 2000 at the 2000 mark, actually. So we kind of need to see the small caps catch a bid here and trade up through that. Otherwise, that could be a red flag that maybe we're seeing a bit of a topping pattern here. And the fact that we also have the weakness in the Dow Jones over the last week or so is also a little bit of a red flag here. We'd like to, we're going to see if that's going to maybe bring down the other indexes. Also, on a positive note, we saw that most of the sectors now are back above their 200-day moving average. Also, relative strength shows that the consumer discretionary, communication services, technology, materials, REITs, they're all outperforming the S&P 500. That's a plus. And then we also saw a point and figure bullish double top breakout in the financial sector, which is XLF. That's a strong buy signal down here. There may be something that you want to check out. If you look in the MarketEdge industry groups, you might look up some of the banking industry groups and find some stocks that are rated either long or early entry long. I think you can probably start to nibble away on those with rates high like this. And I don't know if they do pause. I think the banks would be a good place to be going forward here. Okay, underlying breadth is still positive. We're seeing the NYSE and NASDAQ advanced decline lines move higher. That shows broad accumulation. Let's see, the NYSE AD line hit its highest cumulative reading since August. So, it's a widespread rally. It's not a thin, narrow group of stocks or anything like that moving the market higher. It's broad based, which you want to see. New 52-week highs outnumber the new lows for a fifth consecutive week, and they're also expanding, which is again that confirms the move higher. And lastly, I mentioned last week that we're seeing a lot of volume in here over the last week or two. In fact, the NASDAQ is some of the highest volume that we've seen in several months. So a lot of people are in here picking up a lot of the big growth stocks. Of course, some of these stocks that fell, like Nvidia and some of these, and Meta and others that fell 60-70%. They never should have been down that low. And people are buying them ahead of it. They may not be going up 30-40%, but they're too low right now for the business models, and we're seeing a lot of buying going on there. As far as investor sentiment goes, it's neutral, which is fine. We did see an uptick in bullishness across the board. The retail investors, they're a little bit. They're more than the bears now. No, they're not. They're almost. It's about 30 to 34% as far as retail investors go. So they're picking up the pace. And then we've seen the active investment managers exposure index. That was up for a fourth straight week. And that shows that the hedge funds and the pros, the portfolio managers and all, are about 78% invested with exposure to equities. That means that they're looking at the market. They see higher prices here over the near term. So that looks good. Like I said, as far as industry groups go, if you follow that, you can click on that. And a lot of times, if you're seeing the stronger improving numbers go up in the industry group tracker, that's a good thing. We were the week before, we were at 63 industry groups were strong or improving. That jumped up to 74 last week. So we're seeing again a broader participation in what stocks are moving up. As far as the industry groups go, last week coal was the strongest group. That was followed by home construction, building materials, and diversified mining. You're seeing a lot of the metal stocks and mining stocks move higher, which is strong. I mean, they'll help the investors out later on. And then as far as the ETF goes, blend, small cap blend was the strongest ETF category. It was up like 6.97% last week. And then we also saw strength in specialty communications and telecom and real estate, and actually some alternative energy stocks were strong also. Now, just to touch base real quick, yesterday, again, we saw stocks slide again for a second day, and that's basically because of the jobs report. It's kind of choppy trading. We did see yields tick higher. The 10-year actually made it up yesterday to 3.64. It's a tick, a hair higher than that right now. We're at 366 after Powell got done with his speech. The 2-year Treasury went to 4.47. That tick higher in yields also sent the U.S. dollar a little bit higher, which weighs on stocks. That also sent the U.S. dollar back above its 50-day moving average. So you might see if as Powell mentioned today, that they may have to raise rates a little bit, a few more quarter point inclinations rather than just one and then pause. He kind of when he came on today at his speech, he started off with a pretty confident and again had that softer tone, and the market shot up like 260 points, the Dow. But then when he came in and he said that with that jobs report, we are going to have to perhaps maybe have a few more quarter point hikes going forward. Then of course the market went down, was down 200 some points, and now here in the last probably half an hour or so, we're seeing the major averages break back above the flat line, so they're positive again. A wild swing. I think you have this element in the market that is counting on the Fed stopping their rate hikes, and they keep telling us they're not, and I think they're a little bit delusional to think that the Fed's going to stop raising rates here anytime in the next couple of months. Especially with that jobs report on Friday, that's one of their mandates is they want to see the jobs numbers come down a little bit. So we'll have to see a little bit of a break in that. I mentioned yesterday that trading today was going to be all about whatever Powell says in his talk, and it certainly was. Again, like I said, we saw the market shoot up about 250, 300 points, then it came down 350 points, and it came back up another 200 points. So it's all over the map. But the point of it is, with that jobs report, I think you're going to see some sideways trading for the next week or so until we can get some more data points, especially on the jobs numbers. I think we have a CPI and some of those inflationary numbers coming in. I expect to see those continuing to move down a little bit. That'll help stocks. And then if we see that Friday's job report was an anomaly, then I think maybe we can start to see the yields maybe start to ease a little bit lower again, and that'll prop up stock prices.
Okay, so you mentioned the major averages had broken out of bullish double and triple top point and figure chart patterns the last few weeks. Let's go over what that means and how subscribers can find point and figure breakouts in their investments.
Yeah, let's go ahead and go to the stocks module. And I want you to put in the S&P 500. And while you're doing that, I think most of you probably know what a point and figure breakout is. Okay, a point and figure chart is the chart that you can see on the picture here. It consists of X's and O's. When a stock or index is moving up, you're going to have a column of X's. When it's moving down, you're going to get a column of O's. Generally under $100, which this is not, but we'll just imagine that it is. Usually under $100, what you do is if you're in the X's, every time you get above a point, actually if the top X is 60, we get a trade at $60.05. Then you put another X in the column, and then what we do, it waits for a 3-box reversal, which means if we hit 60, we'll start a series of zeros for the short-term trend change or trade change after we go down $3 from the last X. And what happens is these things. This is on supply and demand. There's no time element in these charts. And what happens is if you look at this S&P 500 chart over here on the right, you'll see there were 3 columns of X's that came up to a certain point, and then this last column of X's we saw it break out. Okay, when the X's come up the first time, that's the top, and we come down. The second time, when it moves above that second column, it would be a double top breakout. When we get to the third column and it breaks out, that's a triple top breakout, and it can actually go to a 4th breakout. That just means when you look at a chart like this, that there's a lot of resistance at that area. In other words, the stock index gets up to that price, and sellers are coming in, and it's not able to go any further, and you'll see it reverse back. Now, when it does break out, we see that the series of X's go higher. That's the buy signal. They've been using that for forever. These charts have been around. There's some story about that they used to be used by old rice traders in China and Japan or something like that. So anyway, but this is a buy signal. They've back tested these things. I think on a triple top breakout, it's something like 6 months down the road. There's something like an 85% chance that the stock index is going to be higher than where it broke out. Out of a double top, I think it goes down to about a 79% chance or something. So it is a very positive correlation to what's going on. And then on the bottom part, when you see the O's come down, you'll see the O's maybe come down to a certain price point, say $50, and then it reverses to an upside again. Then it reverses to the zeros, and they come down to $50 again. That means that's a support level. And then when you have a bearish point and figure breakout, that means that the supply overwhelmed the demand, and now you have a breakout to the downside. And these are, again, very strongly watched by traders. They're one of the best buy and sell signals you can find out there. As you can see right here, when I talked about the S&P 500 last week, we had that triple top breakout. Again, which with underlying breadth is strong. This is a nice buy signal for the market. You want to see this thing if we can, now we're making a series now of, we made a lower here, a higher low on the right, and now we're making a higher high. That's good. We'll put up COMP, NASDAQ. Okay, this is a little bit different. We had a double top breakout over here to the left. It's on a series of I'm not sure if that's updated correctly. I would need to take a look at that. Let's see, what was it? Was NASDAQ up 100 points, 1%? Possibly we had that reversal, but you had a double point. I thought you had a triple point figure, but I guess not. Double top point figure on the NASDAQ. You also had one on the Philadelphia. Let's see. The Dow Jones had one a while back, and the Philadelphia Semiconductor Index had one. The stocks. Put up the Russell 2000 a minute. Okay, there you can see on that one you have another breakout on the Russell 2000, and then you can see once it breaks through that resistance area, you get a nice move generally to the upside. You usually don't just get 1 point to the upside and go down. Now, if you go over here farther to the left, you'll see a failed double top breakout, which would probably, I don't know, I would probably been bet last August or something like that, where you got to that resistance level and it couldn't break through, and then you had the reversal with the O's, and you started coming down. You can also draw trend lines in these things. Now, if you go back to the stocks page, you go back to just put in a regular stock. Let's say Microsoft. Okay, let's go ahead and look at the point figure on this. Okay, now you can see with Microsoft, you have a potential double top bullish double top point figure breakout coming up. The stock would need to trade at. I can't see that, Will. Let me see. I'm going to put my. Let me see what price on my chart here. We'll get that price. Hold on 1 second. And then I'll lead this into early alerts. Okay, so if we get a trade above 265, you'll get a breakout, double top breakout point and figure buy signal on Microsoft. Today we are at let's see. So we had a nice move in that. Today we're at 268. So you got your point and figure breakout today on Microsoft. And of course, a lot of times once these things go, you'll get more of a buy. The momentum will usually pick up in it. Now, another thing that will happen with these things occasionally, if you miss the breakouts, you don't need to be alarmed. Oftentimes, you might see after it breaks out, it'll come back down to the breakout price and allow you to buy it again. You watch to see if it comes back down here to this 265. 265 then would represent a price if it holds and starts to go back up. That would be that meant it would have tested the resistance level. Now that now becomes support, and that would give you a chance to buy the stock and ride it higher. Now, one of the things that we do here at MarketEdge is you have thousands and thousands of chartists that just buy and sell off of point and figure breakouts. And what we do is something called an early alert point and figure breakout. And what this is, on the point and figure early alerts, go to the advanced tools, Will. Top. Okay. Now, if you look over here, what we do is we're going to give you the every day what the point and figure breakouts to the top and the bottom. I don't know whether Microsoft was in the earlier alerts. It usually would have been. But what we do with the point and figure early alerts is we front run all these chartists, professional traders that are out there just buying and selling on the breakouts. So but with this early alert, what we try to do is we show you the stocks that are actually getting ready to break out. They're going to break out of a certain double top or triple top or quadruple, whatever, if they get a certain price. And what we do is we list the price, list the stock, and let you know that if this stock trades at, say, 25.01 or 25.02, it's breaking out of this pattern, and it's going to be a buy. Now, one thing that lets you do on that is you can actually put a buy order in. Like, say, if the breakout price is 25, you put a buy order in on something at 25.10, and you don't buy the stock until it breaks out. It may stay in there for a week before the stock actually gets up and breaks out of that price. If it doesn't break out, you never bought the stock. But if it does, you're one of the first ones to buy that stock on the breakout. Go ahead and put up point and figure early alert buys. Okay, let's take a look at this thing here. Okay, now we have in here, we list them in alphabetical order. We used to do it by how close it was to the breakout price. We don't do that anymore, which we probably should. But if you go in here and you look at, say, the power rating, you can look at these stocks that they're not only are they coming up to a like this Modvicare, Madison Square Garden. If you click on the power rating and listen from the strongest to the weakest, you'll get a list of stocks that are coming up to their breakout price. So that's IMAX Corporation. It closed yesterday at 1769. If it trades at 18, okay, it's going to break out of a double top formation. Now the other good thing about it is we're long that stock. We think technically it's a buy, and then the power rating is telling you that not only is it a buy, but it has a lot of positive momentum behind the stock. I'm just trying to see if Microsoft. Yeah, okay. Now, if you go on the page a little bit longer. Okay, I was a little bit wrong on my screen. I couldn't see the chart. Okay, Microsoft showed up here. It closed yesterday at 256.77, and the actual breakout price was 258. Okay, well, Microsoft broke out today, and now it hit 269 today. So, had you been aware of this, have been looking to see, well, I want to buy Microsoft if it breaks out. Okay, you could have put a buy order in there yesterday at the close at 258. Well, you'd have gotten hit on that ticket today. When it hit 258, you'd have bought it. You'd have had a $10 jump in the stock just off of that double top breakout. And again, you have it long. It's rated long, and the power rating is 81. I can't tell you how much if you're ready to buy a stock, and you need to take a few minutes just to look at these, especially the early alerts, and just see if that not only does it look good, it's getting upgraded, everything looks fine on it, but then if you had this extra bonus that's breaking out of a supply and demand chart, point and figure demand chart and supply chart, then that just gives you extra incentive to buy, and it also helps you know this where a good entry level would be. So again, a lot of times you'll see a stock looks strong, is going up, and you go ahead and you buy it, and then you're buying it at the top, and that's it. Well, go ahead and wait for the breakout to happen, and then put your order in, and you can, and you got a good entry price to buy the stock at. So look at an advanced tools. Take a look at that before you buy a stock, just to see where it is. You can look at the chart, the point and figure chart, to see if if you're in a string of zeros and you're looking to buy a stock. You put it on your wait list, put it in your stock watch list, and wait until you see the thing turn around, and then it's in a string of X's, and that means you're buying the stock once it's in an uptrend again. You don't want to be going long at the things in a downtrend because you don't know what, or a string of zeros, because you don't know what's causing that thing to sell off. So that's a feature on MarketEdge that is invaluable. If you're not using it, you need to. And you can also, on these things, on these advanced tools, we have some relative strength breakouts. If you don't know what that is, You can read about it in the glossary and stuff like that. But relative strength breakouts are stocks that are all of a sudden, their 50-day relative strength is going to start breaking out, outperforming the S&P 500. So that cycles are in negative territory, but the underlying breadth for the major averages has been so strong that we've been keeping it neutral. Interestingly, though, from when we went neutral on the Dow Jones on January 13th, the stock hasn't moved. The Dow Jones was 34,100 or 34,200 when we went to neutral, and with this little rally today, it's at 34,017. So it's still below where we downgraded to a neutral. You have the other indexes kind of catching up. If you remember last year, Dow was the one that was outpacing everything. Now you have the other ones playing a little bit of catch-up ball. So we'll watch to see if if the other ones stay strong. We'll keep an eye on the underlying breadth. The market is a little bit stretched. Last time we saw 5 weeks in the NASDAQ up in a row. I can't even tell you when. I think it was last April or something like that. So things are looking okay, but again, we're a little bit toppy, and we don't want to be chasing stuff in here. So we'll just kind of we're neutral on the market in here, and we'll wait for some more data points to go, or we'll wait to see if we start to see the yields start to tick down, which could help move stocks a little bit higher. So that's all I got today, Will.
All right. Well, that's all we have for you this week. Remember, if you have a question you'd like answered on the next Tuesday Tech Talk, email it into support@marketedge.com or ask one of our live chat representatives to pass your question along to us for the next Tuesday Tech Talk. Thank you for tuning in. We'll see you next week.